Now, if you've clicked on this video, the chances are you're currently in a losing streak, or you have experienced one before. Now, if you are, don't worry, just make sure you watch this video to the very end before you place your next trade. Every trader... Now in this video, I'm going to show you 5 rules that professional traders follow during losing streaks to make sure they can protect capital and keep trading consistently. Every trader goes through losing streaks at some point in their journey as a trader. Now, where beginners separate from professional traders is that beginners will end up blowing their accounts because they end up trading emotionally rather than systematically. They tend to fall in some very, very common traps. For example, they start to think, is this strategy really for them? Is it a strategy that's the problem? Does this strategy no longer work within the markets? Or they start doubting the people that they got the strategy from. Are they talking a load of rubbish? And while they're doubting their strategy, they end up revenge trading at the same time. So they're taking trades that aren't really there. They're taking very, very low quality setups. And that's where they end up going into this major downward spiral of just consistent losses because they're no longer trading with that systematic approach. Now, if you are being brutally honest with yourselves and you have experienced some of those traps that I have just mentioned, don't worry, a losing streak is perfectly normal. It doesn't mean the strategy is not working, it just means the conditions and the execution that you're taking in the markets may be a little off and we just need to correct them. Now, the first rule I'm going to go through isn't one that you'd probably expect me to say, and is a rule alone that can save a lot of accounts. And that rule is to never mess around with your risk. And that includes decreasing your risk as well as increasing your risk. Now, a lot of people would expect me to say, if you're in a losing streak, reduce your risk so you're trading smaller. Well, I'm not going to tell you to do that. I'm going to say, maintain your risk at 1%. Now, the increasing your risk, I think goes without saying that if you're risking 1% and you end up risking 2% because you want to claw back that 1%, and then that trade loses, now you're 3% down. And then you're wanting to claw back that 3%, so you risk 5% and that one loses. Well, for us, trading 1% constantly, it doesn't matter if we experience 3 to 4 losses because we know that only one trade can get us out of drawdown. Now, if you're risking 1%, losing that, risking 2%, losing that, risking 3%, losing that, now that's 3 losses in a row and you're 6% down as opposed to 3% down if you kept it systematic. Now 6% is a lot harder to claw back than 3% risking 1%. So just never ever increase your risk. Now the reducing your risk side of things is where, thankfully because of a few of our members in the community, maintaining your risk at 1% is actually a lot beneficial than reducing your risk because, like I mentioned, if you lose 3 trades in a row and you end up going to minus 3%, that only takes one trade, as in like a simple 1 to 4 that we trade on the 5-minute charts, to get you out of drawdown. Whereas if you start risking 0.5% at that point and you win a trade, say that trade is a 1 to 4, that's only going to claw back 2%. And it's going to really mess with your emotions, especially if you find yourself winning on the 0.5% trades and losing on the 1% trades. I would say just stick to 1%, never change it, and the results will speak for themselves. Sorry to interrupt the video that you may be watching at the moment, but this is just a quick friendly reminder to come and join our Discord. I will leave a link for it in the description below. Not to mention the VIP exclusive side of the Discord, which goes live on the 1st of March. And that's if you're maybe struggling to stay consistent, you maybe haven't reached profitability in your trading, and you can just generally trade a lot more closer with us. You're going to have our 24/7 support. You're going to get access to the exact trades that we take, how and when we take them. And also you're going to get access to a ton of resources, so blueprints, cheat sheets, everything you need to take trading into your own hands. I'm a big fan of the quote, you can catch a man a fish and he'll eat for a day, but if you teach him how to fish, it will feed him for a lifetime. And that's the exact philosophy that we're taking with this VIP Discord. We are not here to do the trading for you, we are here to teach and educate you about trading so you can take trading into your own hands. So as I said, I will leave a link to that in the description below, so come and check it out. And with all that being said, I will let you get back to the video. Now the second rule is where most traders actually fail during losing streaks, and it's the rule of only taking A+ setups. Now personally, when we go into drawdown, we have a rating system where we can rate our trades before we execute them. That gives us a rating of how high quality we think the setup is before we take it. And when we're in drawdown, like I said, we only take the highest rated setups. And that just means we're not forcing trades that aren't really there. We're not revenge trading as such. We're not taking really, really low quality setups. Now we also have a checklist as well, and that's part of what we use to help us rate the setups. Now, for example, when we look at this checklist, we have all the rules and the criteria that part of our strategy in front of us while we're looking at the trade. And that is how we can decipher between when a trade is valid versus when we're just trying to force a trade and the trade isn't really there. So for example, some of our rules are, does the trade have at least 2 candle liquidity? Is the high of the liquidity broken? So is there a break of structure? Are we in a bullish trend? Does the higher time frames align with the trade that we're trying to take? And so on. Now you can see by having the checklist in front of us, it's going to make sure we're trading as robotically as possible and not letting our emotions get involved whatsoever. Now, rule 3 is the professional boundary that most beginner traders just simply don't have within their trading. And that is making sure you have a stop loss on your day as well as your trades. So if you experience 2 losses, close your laptop, get on with the rest of your day and don't think about trading. Come back to it with a fresh mind the day after. Now, what is this going to prevent? Well, this is going to help you stop revenge trading. It's going to reset your psychology for the next day, and it's going to protect your discipline. Now, seeing it as a stop loss on your day as well as on your trades, I think is a really, really good, interesting way of putting it. It gives you a boundary as to say, enough is enough. I need to stop trading for today before I fall into those traps. Now, for me personally, I either have a 3 trade rule or a 2 loss rule. I will never take more than 3 trades in a day or more than 2 losses in a day. So if I've experienced 2 losses that day or I've already taken 3 trades, I will close my laptop and simply walk away. I will not even look at the charts for the rest of the day. I don't care if a perfect A+ setup presents itself. I will simply not see it because I wouldn't even be at my laptop. Now, you have to see it from a psychology point of view where if I've taken 2 trades already that day, my emotions are naturally going to be very, very high and they're going to want to start coming into my trading. And that's where I have to sort of say enough is enough and not let that happen before it does. And I can come back to the markets the next day with a fresh mind, a fresh look at things, and I can make decisions from a completely fresh perspective. So rule 3, put a boundary on your trading and stop after a certain number of trades because emotion can compound very, very quickly. Now, rule 4 is another rule that has dramatically improved my consistency across the markets, and that is reviewing your trades on execution, not the outcome. Now, this goes back to what I was saying earlier regarding to having a checklist in front of you and making sure you have a trading plan. If you don't have a trading plan, you simply shouldn't be trading. So you can look back on the trade and you can compare it to your checklist. So has all my rules been met? And if it has, it's a good trade to take, it's a perfectly valid trade, and you would take it 10 times out of 10 if it was to come up again. This will keep your trading systematic. Now, we don't want to be greedy. We know that our win rate is between 50 and 60%. So we're going to have between 4 and 5 trades out of 10 that are simply going to lose, even if they are a perfectly valid setup. But making sure we're reviewing the trade on execution against our checklist and criteria rather than on the outcome, because we know we're expecting some losses in our trading anyway. Now, rule 5 is the final rule, and it's the rule that brings traders out of losing streaks probably the fastest. And that is simply returning to basics. Now, with a lot of traders, they will find themselves ever so slightly drifting away from the basics of what their strategy is, purely to cater to their emotions at that given point. And your edge is very, very important within the markets. It's what helps you stay consistent and helps you stay out of losing streaks. And that's why, as I said earlier, in the Discord, we have a checklist and a trading plan, and we have those so we can constantly remind ourselves of the basics of the strategy and making sure before we look into any advanced techniques or any variances of the strategy that we have the basics covered first, because if we don't have the basics covered first, we're essentially no longer trading the strategy. So rule 5, no experiments, no variations, just the core basics of your strategy, and stick to that. Now, I'm going to end this video with a closing message and say losing streaks do not come from the market, they come from deviation. And the traders who survive this are the traders who can trade systematically when emotions are at their highest. So if you enjoyed the video, don't forget to like and subscribe. And of course, come and join the Discord. I will leave the link to that in the description below, so you click on that and come and see what it's all about. And the exclusive VIP part of the Discord is going live on the 1st of March. So you're gonna want to come and see that because you will not want to miss it, because it's gonna be absolutely packed with a ton of resources such as blueprints, You're going to get 24/7 support from myself and my brother. There's going to be exclusive only live streams and trading chats that you can chat to with other traders who are part of the community as well. You're going to get access to everything I've spoke about in this video and a whole lot more. You're going to know the exact trades that we take, when and how we take them. You're going to get access to our trade management, our risk management, our full trading plan, and our checklist that I spoke about in this video. So stay tuned for the 1st of March. Come and join the Discord in the meantime because you will not want to miss it.